Hello all and welcome back. I hope you're all doing really well. Thank you again for the love and support on the most recent video. Seriously means a lot. I do cover in that video the unstaking features now available on Stader, as well as some commonly asked questions about balances and holding periods, etc. So if you are interested and you do own HBARX tokens, make sure you check out that video as it gives you some more information about it. This video is going to cover some more crypto market news predominantly, lots of different stuff going on at the moment, as well as some US inflation statistics that have come out early from the PCE inflation. Not only that as well, I will round the video off talking about some HBAR news, as there is some different things going on that may be of interest to a lot of you guys. Right, jumping straight across into this new economic report. So earlier today, a headline got released by MarketWatch saying raging US inflation is starting to cool. Key price gauge signals. So the core rate of PCE inflation slows again. A key gauge of US inflation rose 0.6% in May, largely due to the higher cost of gas and food, but there were renewed signs that the price pressures were starting to ease. The increase in the so-called personal consumption price index, which is very different to CPI, was triple the 0.2% gain in April. So 0.2% in April to 0.6% in May. And then we had the CPI inflationary figures, which were much higher as well for the year-over-year position. A narrower measure of inflation that emits volatile food and energy costs, known as the core PCE. So obviously that emits those two metrics from the CPI to produce this new figure, has risen by a relatively modest 0.3% for the fourth month in a row. So we had 0.2% in April, 0.6% in May, and it's now roughly 0.3% in June. So we can see a tailor or drop off there as the rate has effectively halved. This is actually below Wall Street's expectational forecast of 0.4%. The rate of inflation over the past year was unchanged still, though, at 6.3% in April. The yearly rate has backed off a little after touching a 40-year high a few months ago. Core rate of inflation also slowed to 4.7% in the 12 months ended in May from 4.9% in April and 40-year high of 5.2% in March. What's more, the inflation readings in the core PCE rate from February through to May were the smallest since the end of 2020. Unlike its better known cousin, the CPI or Consumer Prices Index, the PCE gauge takes into account how consumers change their behavior in responses to higher prices. They might substitute to cheaper goods from more expensive ones to keep their costs down, for example. So, buying unbranded toilet roll instead of branded toilet roll, or unbranded food as opposed to branded food. Think of things like sauces and Heinz maybe. CPI climbed to a yearly rate of 8.6% in May, which is obviously what we were all watching last month. And we saw the markets take a turn for the worse because that then signaled that hawkish federal policy was going to be continuing in order to curb or stem the bleeding effectively the economy is facing from those incredibly high inflationary rates. The Fed obviously still has a lot of work to do to get inflation back to its pre-pandemic levels of around 2%, which is their target. And it's far from clear that the central bank can achieve a soft landing, which they've been talking about. Good old Jerome Powell. Economist lingo, obviously, for reducing inflation whilst keeping the US out of a recession. I see many people as well talking about the fact that we potentially are already in a recession, and we won't really know until the third quarter's figures to have a better understanding whether we are or aren't. The smaller increases in core inflation are not the clear and compelling evidence the Fed needs to shift to less aggressive rate hikes, said the senior US economist Michael Pierce of Capital Economics, but it does mean inflation is not quite as bad as you'd think by looking at the CPI figures alone. So what can we take from this? Nothing really. Uncertainty is still here massively. We could still see massive CPI figures posted, or not a slowing of the CPI that's expected by Wall Street across the board. That would then trigger further economic policy. Don't forget, the Fed itself is still looking to continue increasing interest rates. I think they're targeting above 3% by the end of the year. That signals there's several larger interest rate hikes to go ahead throughout the course of 2022. However, if anything is to be taken by these, if we do start to see food prices and gas, oil and energy prices begin to fall over the coming months, that could look very good for CPI, and we should see CPI fall drastically as a result of that. So it's coming down to those two key resources as to what's going to dictate the next move by the Federal Reserve. And then, as we all know, that directly impacts the economies and then the equities markets and, of course, cryptocurrencies. My plans still don't change. I'm still dollar cost averaging into those positions. a lot of the altcoin projects at the moment we like to look at are very, very undervalued, and a great time to be building those positions. Talking about Bitcoin, so Bitcoin has just fallen below $20,000 again, and the headline coming out from Cointelegraph is "Can't stop, won't stop." So Bitcoin holders are continuing to buy the dip at $20,000 Bitcoin. The idea that panic selling is driving Bitcoin price losses appears less watertight on the back of the latest data, and this coincides with those figures, those wallet figures I'd mentioned to you guys several times, of one or more Bitcoin has been steadily increasing. So people are accumulating these. It is actually institutions primarily that are de-risking portfolios and selling off positions, large positions, leverage positions of their Bitcoin holdings and cryptocurrency holdings in order to protect themselves from any future uncertainty. Really clear thing to get hold of. It's not because the trend is away from cryptocurrencies at all. It's a very macro-driven environment at the moment. Everyone expects another Bitcoin capitulation event, but the data suggests that mass buying has already started. In a Twitter thread on 29th of June, Checkmate lead on-chain analyst at data firm Glassnode drew attention to who in Bitcoin is really stacking the sats. So Bitcoin selling has made the headlines for weeks and has even begun to include long-term holders, those who have been guarding their coins for 155 days or more. Speculators are not taking the blame for current Bitcoin price weakness, but contrary to popular opinion, many market participants are in fact adding to their Bitcoin allocations. Dissecting the Glassnode data, Checkmate revealed the smallest and largest players are both buy-in mode at around $20,000. So majority of the market sees Bitcoin as being undervalued at $20,000, hence they are building their positions. Splitting the holder base into four sections: shrimps, crabs, other one is known as classic holders, potentially people like me or you fall into one of those two categories. You've then got sharks and whales, much larger positions, potentially institutions. The figures make for a surprising read. So both the shrimps and crabs, the smallest of that user group, retail investors with 10 Bitcoin or less in their wallets, are not only stacking, but doing so more intensely than at any other time since that first $20,000 BTC USD pairing hit in 2017. So can't stop and won't stop. So like we said, the majority of these smaller investors are seriously loading up. A majority of the selling pressure is coming from somewhere in the middle. So middle wealth here. So those sharks scared and margin called. And then you've got the whales, which are primarily stacking. So these are companies probably like MicroStrategy. They're continuing to buy the dip. Salvador, for example, continuing to buy the dip wherever they possibly can to add to their positions. There are obviously some other whales that were invested that are exiting positions because it's not their money, it's assets under management. And obviously they need to protect their investors and their clients at the end of the day. So some bullish news there for the crypto markets. It's not all doom and gloom. Just in as well, though, Grayscale Investments has initiated a lawsuit against the US SEC after their spot Bitcoin ETF was rejected again. I think this is like the second or third time that they've rejected or pushed back the ETF, but this time Grayscale has filed a petition for review of the DC Circuit Court of Appeals. Document officially initiates a lawsuit contesting the SEC's decision to block the spot Bitcoin ETF. We've obviously seen spot Bitcoin ETFs go live in Australia. I think it's 3 now. That have gone live, but obviously there isn't as much capital in the Australian markets as compared to the US markets. Different laws, etc., mean that certain investors can't purchase foreign assets. The rest goes on. We really need a spot ETF to launch inside the United States itself. That is one of the beating hearts of the financial markets and will be very pivotal to allow equity to flow back into the cryptocurrency markets at massive scale. So hopefully we see some more news about that. Jumping across, let's look at some Luna news. Seen a few comments mentioned about the potential for Luna in the future, etc. I've already aired my opinions about Luna as a chain. I wouldn't touch it whatsoever. More news has come out as well about Do Kwon. So hacktivist collective Anonymous has actually just set its sights on Terra Luna's Do Kwon for the loss of some $45 billion in investor assets. So obviously that was that price spiral, death spiral we saw not too long ago that sent LUNC now to zero. His actions were that of a scammer involved in money laundering and fraud. So where has that come from? Well, CoinDesk Korea has then said as well, Do Kwon's Terraform Labs has $3.6 billion in UST and USDT that might have been used for price manipulation and money laundering. So they are also investigating his firms and him as well for potential money laundering and fraud. Personally wouldn't touch any of these particular chains with the barge pole now after what we've seen unfold over the coming weeks and months. regardless of what promises they do seem to make or have been making. It's not something that I have confidence in, and therefore I will not touch it. I'd urge you all to do a serious amount of research, particularly if you want to take large positions. Obviously, it's your own prerogative, but it's something that I'd think about very carefully before you do decide to do so. Circle's EUROCoin is now available on Ethereum and will be supported by leading exchanges and DeFi protocols. So USDC, obviously owned by Circle, a USD stablecoin. They have just released their new one. Our newest stablecoin is designed with the same full reserve model as USDC, so it's always redeemable 1-to-1 for euros. And there's also news as well about them releasing a stable pound, so GBPC, I guess, will be the ticker for that potentially. But it's really nice to see that we've got other stable assets that will be moving into the space, other currencies moving into the space. Not that it's a huge deal, but it just helps spread that adoption and makes it feel more like the traditional finance system for a lot of different users. And hopefully that brings a lot more confidence as well to the cryptocurrency markets, for people having different options when it comes to stables. Binance NFT Marketplace has just opened up minting access as well. So we're still continuing to see this greater notion of NFT, Web 3.0 and GameFi throughout the cryptoverse. And Binance is obviously leading the way with that, with their minting access marketplace. Pretty sure it's probably just going to be Binance Smart Chain based NFTs at the moment, potentially some Ethereum ones as well. So nothing that interests me too much just yet. MicroStrategy has just purchased an additional 480 Bitcoins for around $10 million, an average price of $20,817 per Bitcoin as of 28th of June. MicroStrategy now holds 129,699 Bitcoins, which have been acquired for just shy of $4 billion, an average price now of just over $30,000 per Bitcoin. So they're taking a severe hit on those Bitcoin purchases at the moment, but they still clearly have conviction and they are buying the dip, with obviously Michael Saylor at the helm. And CZ has replied to that. Many may laugh at him now, but Saylor will get the last laugh in time. Bookmark this tweet. I have a lot of respect for CZ, obviously the Binance founder. You can look at some of his talks as well in the past, how he's spoken about Binance and his vision for Binance and their involvement with cryptocurrencies and adoption. And he has a very good outlook on the crypto markets, but also how to run a business. He's less concerned about profits of his business, more so concerned with sort of mass adoption and having a platform that's available to all and ease of access, less friction, etc. So really doing great stuff for the cryptocurrency markets. Has always been fully transparent, and is one of the reasons why I really do like the Binance platform and use it over other exchanges. More bad news for cryptocurrency markets. After an email data breach, OpenSea warns users about phishing attacks. So be very careful about any emails. A lot of you should be aware of this anyway. You get the comments on Twitter threads, you get the comments on YouTube videos pretending to be me or other people on certain channels. And then you've also got emails as well saying you've won 50 billion Bitcoin or something crazy. Just make sure you're not clicking on any links and not interacting with strange dApps. This is a sort of public safety announcement that I've mentioned several times in the past. Just be very careful about what you're interacting with, the links you're clicking on. Data security and safety online is a lot more important nowadays, particularly if you own digital assets, because it's very easy for those to get stolen as compared to, say, the traditional finance system. Whether that be for the better or worse, it's just something to be aware of and make sure you're staying safe online, as there's no recourse if you get your funds stolen, unfortunately. Coinbase is reportedly selling user data as well to the US Immigrations and Customs Enforcement Agency, also known as ICE, including historical geodata and transaction history. So, not very decentralized at all. This is obviously a centralized exchange. Mentioned before, obviously, there's warnings about Coinbase's insolvency. They've fired a lot of or made redundant, I should say, a lot of their workforce as well due to the contractions with the cryptocurrency market. That just tells me they're over leveraged, particularly when you've got exchanges like FTX looking to buy Robinhood, for example. Be very careful about the cryptocurrencies you hold. Be aware again that any cryptocurrencies that you have on exchanges are not your own. You don't actually hold the keys to that cryptocurrency. Transfer them off, get them on local wallets, either online wallets for the particular chains, or get them onto a Ledger, decent wallet, something hardware based if you want to do so. But make sure you own the keys, and therefore you will be safe if anything goes wrong with those exchanges. Touching on some HEDERA related news. So Headstarter, tomorrow's AMA is jam-packed with everything you need to know. So this was actually the 29th. I'll leave this link down in the description as it is a 30-minute recording you guys can listen to about the utility for Headstarter's NFTs, including the sale and functionality. Reminder being an allow list registration for the main HEDERA Headstarter IDO is up only until the 7th of July. So you need to apply for early access. Lemonade did reply to this saying, will the Headstarter org utility NFTs be available for purchase by residents of the United States? Obviously, there's different laws to do with securitization of assets, and you wouldn't have been able to get involved with the early rounds of the IDO for Headstarter due to those restrictions. However, they have come back and said they sure will be available to US citizens. So you will be able to pick up some of these utility NFTs for the platform if you're from the States and missed out on the IDO. Rounding up with some more HEDERA news then, ex-Google CEO 𝗟𝗜𝗡𝗏𝗦 had some words on Web 3.0. So the Web 3.0 vision is correct, but tech needs to build. Ethereum goes to crazy prices with 1 million transactions a day. That's incredibly slow. It certainly is if you compare it to things like MasterCard and Visa. I believe HEDERA is the future of Web3. So some bullish words there from an ex-CEO of Google, obviously Google as well, having potential ties to HEDERA anyway in terms of projects, etc. Lots of good stuff potentially happening there behind the scenes. I've got several videos on my channel about rumored interactions or use cases between the pair of them. If we look at this as well, then talking about transactions, how many transactions per second does HEDERA require to become profitable? Can't give a single round number since transaction fees obviously vary, but most of the time are fixed to $0.001 on average. The usage patterns will change over time. Use cases may start using more higher cost transaction types, etc. But for some rough math from memory, average transaction fee has been around 0.0004. See, the reason it differs is because if you're minting tokens, for example, that's a slightly higher fee than just the base transaction of sending, which is fixed at $0.001. That's the discrepancy and why we have to use averages here. 6,000 TPS using Hashgraph 9's number for the sake of it would generate roughly $2.4 per second in revenue, or $144 per minute, $8,640 per hour, or $207,000 per day, which would be around $75 million per year. Operating costs obviously would nowhere near be that high, so I'd guess the break-even TPS would be somewhere around 500 to 3,000 TPS as a finger in the air estimation. The most important thing to take away from this is to appreciate that it's only possible for us to think about this in a meaningful way because HEDERA's transaction fees are priced in US dollars. And again, that's something else that needs to be taken away from here. It's one of the only chains, or probably the only layer one that I know of, that has fixed fees in US dollars. And this makes enterprise adoption very seamless and easy for them to calculate as a financial transaction, and therefore they can get the onboarding and funding to pursue projects on HEDERA because all the costs are knowns. They don't have any unknowns, which is of course very important for large scale enterprises before they make business ventures. Seriously important stuff. Anyway, hopefully you guys enjoyed this video. Crypto news at the moment is kind of all over the place, as we probably all imagined. It's still seriously down to how the economies perform. I'm still buying though, and hopefully you guys are still making plans to build those positions if it's part of your long-term strategy. If you did like the video, drop a like, drop a comment if you've got something to say. More than happy to reply to as many of them as I possibly can whenever I get a chance to do so. Take care, and I'll catch you in the next one. Cheers.